In today's video, we're going to mark out some key levels for you to watch so that you can be better prepared to make money this week in the markets. Let's start with SPY is starting the week out with a gap down. We'll see where these markets actually open, but at the moment, it's clearing Friday's low. So that would lead me to believe that the bears are going to be taking over short term and probably pushing us back. Now, we've been expecting a little bit of a pullback because the bulls have run out of steam, right? We've made a huge move higher, and now we're failing to really make new highs very strongly. Once we take it, they get pulled back. And the dips have been bought up pretty good, but a gap down is going to start scaring the bulls a little bit, and we're going to get a pullback most likely. So where is it going to pull back to? This is a question I get all the time. Well, we can use charts and we can also use options to help us figure that out. So just looking at the charts, we can clearly see that 565 is a very strong support here on SPY. It makes a lot of sense for the bulls to step in through here. But if we stack our knowledge of what the option market is telling us, that can give us even more insight as to where these markets are wanting to go because they are very heavily influenced by options. So if we simply look at the open interest in your broker for each option strike for the current Friday's expiration, it can give us a really good picture of where these markets are going to try to hold. We have large open interest sitting at 565 and 560 this week. So very, very high amount of puts sitting in that area. Well, what does that mean? That means that the market makers are going to do their very best to keep it up above those strikes because then they'll make money. If it gets below the puts, then they have to start paying it out. So it doesn't mean that it can't get below it, but it means that if it does start to strongly get below these strikes, the market makers are going to have to start to hedge their own positions. They're going to have to start buying their own insurance, and that's going to usually cause things to start to cascade. So once these option levels get broken, you'll see large moves in the markets. And so 565 is the first option level that I'm going to look at. It not only is the all-time high support, and it makes a lot of sense for the bulls to bounce it off of that, but it also has a ton of puts sitting in that area. So it's a very, very strong place for a bounce to happen. Put alerts at 565 and get yourself ready with a game plan in case it does bounce, because that could be a fantastic day trade. It could be a fantastic swing trade. It's just a spot where the bulls should be at. And once you have an idea with that, you just take your strategy and you move it into there. Now you have a sentiment read. Now you have good momentum. Make money. If we start to break down below 565, well, then 560 is the next spot that I will be watching. That is a very, very strong support. It's also, again, another strong put level. So I doubt we get much lower than 565 today. I could be dead wrong. But if we do, expect the bulls to start finding some support around 560. Now, if both of these levels break, something is up. We will most likely sink back down into about 555, and that's where we're going to start interacting with this black trend line again. That would not be very strong, in my opinion. For the bulls, it's a place where they kind of have to bounce it through, and maybe it's just a trap. But really, if the bulls are here and they're excited, you should have buyers lined up at 565. So if we start crushing below that, yes, it can bounce. But that's just going to simply make me wait for a little bit more confirmation, watch price action, see if the bulls step in strong, if it's a trap, whatever wants to happen. But I'm not just going to jump in and go long if we are below 565, because for me personally, that's showing me weakness from the bulls. They really need to hold these all-time high levels. Once you claim an all-time high, you should see strong support when we retest that all-time high. So that's what I'm expecting this week. Again, this gap down is pointing towards a little bit more of a bearish open to this week. Will that just get bought up? Very, very possible. Lots of lower wicks coming in all last week. So this dip down, I think, is decently bearish, but there's a very high chance it gets bought up. And again, I am looking for 565 to go long this week if I can get my setup in that area and take it up to probably 580. Now, will we get to 580 this week? Most likely not. But 580 is a very large call open interest strike. So I don't believe we'll get much higher than 580 by this Friday. That is a huge level, and it's a spot where a lot of people are going to be taking their profits. So keep an eye on that. So if we just start screaming to 580 and you're a day trader, you have alerts out there, you can start looking for a bear setup. And if you get it, again, don't just short it just because it gets there. That's not what I'm saying. But if you get your bear set up around 580, that's a place where people are going to be taking profits. That's a place where I'm going to be taking profits. And it makes a heck of a lot of sense to watch these markets get a little bit of a pullback off of 580. So keep an eye on those levels. Use options to help you identify them so that you can have a better idea of where the big money's trying to play at, where they're looking to take their profits, where they're looking to get in, and where they want to keep these markets to make the most money. If you would like to learn more about options and how to identify these levels and use them in your trading, because they're a fantastic tool, just go to the first link down in the description and start your 2-week free trial in our All Access Pass trading community. Inside our All Access Pass, you get access to free weekly coaching from me and the other RLT moderators. You get access to our trades, you get access to our analysis, you get access to live trading with us. There's a lot of great perks and benefits of being a member in the All Access Pass. And so you can start your 2-week free trial by just simply clicking that first link down below. And this week I'm teaching options. So if you're interested, you've always wanted to learn, I'm going to teach you options in the most basic way that you can apply right away and start making money. Check out that link down below. Now let's take a quick look at Apple. Apple is gapping up when the markets are gapping down. And so that's showing me a little bit of divergence from the markets and let me know, hey, Apple could be finding some bulls this week. A lot of money is going to flood into where the strength seems to be. And I love this gap up when everything else is gapping down. The targets for Apple would be around 233 area all the way up to 237. This box is a great place for people to take their profits. And so if we can start finding some entries down into this area around 230, 227, and then take that up to 236, 237, that's a great trade. And it looks very reasonable that it could be getting there. We do have an inverted head and shoulder currently on Apple. And so this is starting to break that neckline and could be finding quite a bit of bulls to scream through here. So in the moment, looking bullish. If we start to take out 223 on Apple, something's wrong. That's a spot that the bulls should not give up. So if they do, I would imagine some selling would follow through, probably back into like 215, 214 on Apple. Tesla is a very interesting one. So whenever Tesla starts to run like crazy, people get mad FOMO and they're like, oh my gosh, I didn't buy anything through here and now it's just taking off. And then they start to go, all right, I'm going to start buying up here. That's your natural instinct as a trader. Well, if you just know how to read these charts a little bit, you'll realize all Tesla is doing is we are in an up channel right now and we are at the top side of this up channel. It's rejected us now for 4 days. Could it go higher? Yes. And I still believe there's quite a bit of strength there, but this is a profit taking area. They're going to take their profits at the top side of channels. And so everyone else is looking to buy to get in, and it might be green for a couple hours and then they get smoked. Don't be those people. Just plan your entries where the buyers are sitting. And the buyers right now are sitting around 240 down to around 235. That's where your bulls should be at. Have a little bit of patience. Be okay. Let Tesla run without you and see if Tesla will pull back in. Of course, make evaluations as the time goes. But for right now, I'm going to find my key bull areas, and that's right around that 240 mark to 235. And I know my profit taking areas, which are going to be pretty much where it's at right now, 260 up to 270. So maybe Tesla continues to ride this channel a little bit higher. Fantastic. But I know people are going to be taking their profits here. Do not get FOMO and try to chase this. That's where you're going to get in trouble. Be patient. Be okay missing out on money, and you will start making a lot more money in the markets. Nvidia is the last one that I want to cover today. And so far, we are stuck inside of a pennant pattern. So we have a trend line coming down, causing lower highs, and we have a trend line coming up, causing higher lows. This is simply compressing, and it is a bullish sentiment resting period after a large move up. So that tells me that there's a pretty good chance that Nvidia could be finding some bulls very soon, probably at the end of October, but expect this to keep ping-ponging inside of this pennant for right now. So this is where the trading gets a little bit tough, because it looks so bullish and then it just falls apart. And then it looks so bearish and then it bounces. That's classic pennant pattern trading. So identify it, and all you have to do is just put an alert on this downward trend line and wait for a daily candle close outside of that. Now you know the bulls are ready to rock and roll, most likely going to get some sort of retest, and then it's gone. Don't try to play the bounces and rejections in through here. It just gets tricky, gets trappy, and if there's not really a whole lot of momentum, so you're just sitting there a lot, and it's hard trading. Make trading easy. Don't make trading harder than it needs to be. So that's what I'm waiting to do on Nvidia, is just to wait for this downward trend line to come through. And then when we get a close above that retest, I'll be ready to rock and roll. And it could possibly from 145. I mean, we could be screaming up to trend lines all the way up to 185, 190 on Nvidia. It could be extremely powerful. It's just not yet. It's also possible that we do break down on this pennant And if that happens, I would first expect traps. So it breaks and then reverses strong. But if we do break down and we see quite a bit of follow through selling on this, then really, I mean, anywhere from $80 down to $60 is where this is going to need to pull back. It's extremely extended. So will that actually happen? I doubt it. But just be aware that is a situation and a scenario that I want to be aware of and plan on. But most likely, if we break the bottom side of this, it's probably going to be a trap and bulls continue to push higher. I hope these key levels that I mentioned are going to help you in your trading this week. We make these videos every single week to be a blessing to you. I hope that they are. If you would like to come learn options with us completely for free for 2 weeks, just click that first link down below. I will see you next week.